Shiba Inu holders. What I'm about to break down in the next few minutes is something the mainstream crypto channels are not putting together for you. 3 separate developments just dropped, and when you line them up side by side, the picture they paint is one that every single SHIB holder needs to understand right now. So if you have any interest in Shiba Inu, or you hold any SHIB tokens, then you can't afford to miss this video. So what is the latest Shiba Inu coin news, and how will all of this affect the value of Shiba Inu? In today's video, I will be answering these questions, and I'm going to be telling you all of the price-boosting information that has just come out about Shiba Inu. I have put a lot of research into this video, so make sure you watch until the end to not miss out on any information. Extraordinary, and I want to make sure you understand what it actually means. On Monday, March 23rd, blockchain tracker Shib confirmed that the Shib burn rate surged by 637.44% in a single 24-hour period. In one day, 8 million Shib tokens were permanently destroyed, removed from circulation forever. That's not a gradual tick upward. That is a sharp, concentrated spike that reflects either coordinated community action or a single large player making a very deliberate move. Now here's the context that matters. Shiba Inu has a circulating supply measured in the hundreds of trillions. Burning a few million tokens in a day is not going to reshape supply overnight, and I want to be straight with you about that. But what burn events like this actually do is something more subtle and arguably more important. They signal that the community is still actively engaged, still committed to the long-term deflationary goal, and still doing the work even when the price is in a rough patch. The burn strategy exists to reduce SHIB's enormous supply over time, and sustained recurring activity like this is how that happens. Not in one dramatic event, but incrementally, persistently, over years. And the market noticed. Following the burn surge, Shiba Inu recorded a 5.68% price increase within 24 hours. After a difficult weekend in the red, that reversal in both network activity and price direction on the same day is meaningful. Now let's talk about the shorts, because this is the story that surprised a lot of people. Shiba Inu reversed a 3-day losing streak last week, rising as much as 5% in a single trading session. Here's what makes that move particularly interesting. It happened despite a bearish signal that typically spooks retail investors. A death cross had formed, where a shorter-term moving average crosses below a longer-term one, widely interpreted as a warning sign of further downside. The bears saw that signal and loaded up short positions, betting on a continued decline. They were wrong. Shib briefly dropped to 562 units after the death cross appeared, and then it rapidly reversed upward, posting 12 consecutive green candles in a row. Short positions were completely cleared out. In a 4-hour window, short liquidations hit zero, while long traders were the ones caught off guard by a sudden dip. What analysts are calling this is a bear trap. That's when a market gives a false bearish signal, lures traders into short positions, and then reverses sharply, forcing those shorts to cover and buy back in at higher prices, which in turn accelerates the upward move. The fact that Shib bounced hard precisely where the bears thought it would break is a signal that there was real buying demand sitting underneath that price level. There's also a significant regulatory development that's been flying under the radar for Shib holders. On March 17, 2026, the SEC and CFTC jointly recognized Shiba Inu as a digital commodity. That is a landmark classification. It removes the regulatory uncertainty that has weighed on meme origin tokens and opens the door for the kind of institutional participation that has previously been hesitant to touch Shib. That clarity changes the conversation around this asset, quietly but meaningfully. If you are still watching, it would be massively appreciated if you could go ahead and smash the like button. It costs nothing and really helps support the channel. But keep watching to find out the latest Shiba Inu updates and what the future could hold for the Shiba Inu coin. And now the third piece of the puzzle, the one that I think is actually the most significant of all three. 199 billion Shib tokens left exchanges. Gone. Withdrawn from trading platforms and moved into private wallets. Let's be clear about what that means. When tokens leave exchanges, they are no longer sitting in the order book available to be sold. They've been moved into self-custody, wallets that people intend to hold, not trade. That is the definition of accumulation. Someone, or likely multiple someones, looked at the current price of Shiba Inu and decided they wanted those tokens off the market and in their own hands. When you layer that on top of the burn rate spike and the short squeeze, a consistent theme emerges. Supply is being removed from circulation through burns. Supply is being removed from exchange order books through withdrawals. And the short sellers who were betting on continued downside just got punished for that bet. The shorts exiting also tells its own story. When short positions clear out rapidly, when traders who were betting against Shib decide the risk isn't worth it and cover, it reduces the downward pressure those positions were creating. Less short exposure in the market means less potential for cascading sell pressure if prices dip. So let's put the full picture together, because this is what matters for you as a holder. You've got a token that just saw its burn rate explode 637% in a single day. You've got a bear trap that wiped out short sellers and produced 12 consecutive green candles. You've got 199 billion tokens walking off exchanges into private wallets. You've got regulatory clarity from the SEC and CFTC formally classifying Shib as a digital commodity. And on top of all of that, T. Rowe Price, the $1.8 trillion asset management giant, has listed Shiba Inu as an eligible asset in its actively managed crypto ETF filing. That is institutional legitimacy arriving at Shib's door in a way it has never seen before. None of this means the work is done. Shiba Inu's supply is still enormous, and the deflationary progress is long-term, not overnight. The broader crypto market is still navigating geopolitical headwinds and macro uncertainty that don't discriminate between Bitcoin and meme tokens. Short-term rallies have been sold into consistently, and breaking that pattern will require sustained buying pressure, not just individual spikes. But the direction of travel across all three of these stories is the same. Supply is shrinking, demand signals are appearing, the regulatory environment just got materially better, and the community that has held through every bear cycle, every red week, every discouraging chart, that community just sent 637% more tokens to the burn address in a single day. That's not a community giving up, that's a community that believes what it's building. Many of our subscribers comment that they are not going to sell Shib for the next 5 years and hold millions of them because they believe in the Shiba Inu developers and the real-world value of Shib. How many are you guys holding? Don't forget to list your Shib holdings in the comment section below. Let's praise the Shib holder for
This is not a drill. Wall Street just dropped something crazy. There might be a massive change to Palantir soon. It's going to affect everyone big time. Almost $2 billion are on the line, and you might not be ready for this. What is happening? And what on earth am I even talking about? Well, let me explain. Disclaimer. Palantir is showing who's the real boss of AI stocks today. While the rest of the market is bleeding red, Palantir just keeps climbing. It's refusing to back down. But here's the crazy part. Wall Street just dropped a major bomb for Palantir. There's this growing speculation that a stock split might be on the horizon. Yeah, that kind of move. Some folks are hyped beyond belief, thinking it's the ultimate bullish signal. Others are panicking, overthinking it, trying to find something wrong. It's getting chaotic, but in a good way. And while retail investors are debating back and forth on what this all means, guess who's silently making moves? The big guys, institutional investors, insiders. They're not hesitating, they're scooping it up. And partnerships? More are being announced. It's as if everyone suddenly wants a piece of Palantir. The confidence is loud, even if it's not being shouted. This, right here, is the kind of momentum that creates a massive, long-term catalyst. We're not just talking about a temporary hype train. We're seeing the pieces being set for something huge. Palantir on the path to becoming a trillion-dollar company? Honestly, at this point, it's not even a bold prediction. It's starting to feel inevitable. And the best part? We might not even have to stress too much if we just hold on and let the vision play out. But wait, before we go full throttle on this stock split and trillion-dollar forecast, let's zoom in a bit. Let's talk about how this whole thing is reflecting on Palantir's price chart right now. And trust me, it's not just some boring technical talk, because one analyst broke it down and what he's seeing could be a sign of something big about to happen. He mentioned there's a small bear flag forming, which usually means the price could cool off. But here's the twist. Palantir is acting defiant. Like it's being called to pull back by the 50-day moving average, but it just keeps saying, nah, I'm good, and climbing higher instead. It's teasing that average like it doesn't care, like it's on its own path, and the chart has to catch up with it. This kind of price action? It's not normal. It's not weak. It's powerful. It tells us Palantir isn't just being dragged up by hype. It's being pushed by something real. A mix of strong hands, smart money, and and a future people are finally waking up to. So yeah, people are talking about a stock split. Others are looking at the chart and waiting for a dip that might never come. Meanwhile, Palantir just keeps climbing, partnerships keep rolling in, and insiders keep accumulating. All signs are pointing one way, up. So what just happened? One analyst just shared something crazy. According to him, Wall Street is already buzzing about the stock split rumor. He said, Wall Street is discussing the rumor of a stock split. What do we think of this? It is possible, but I won't speculate much on it, since it won't do anything to the fundamentals. He kept it real. According to him, stock splits are mostly just noise. He even pointed out that fractional shares have been around for over 2 decades now, and they blew up during the pandemic era. So, for him, a split is pretty meaningless. He even went further and said, as a long-term shareholder, I really don't care. It doesn't change my long-term view on the company. Fair enough, right? But here's the thing. Even if a stock split doesn't change the fundamentals, it can change the game when it comes to how the market reacts. And that's where it gets interesting for Palantir. Because while the analyst is totally right from a technical angle, we can't ignore the emotional, psychological side of the market, especially when it comes to retail investors. A stock split makes the stock feel more accessible. According to him, retail investors seem to enjoy it. And he's not wrong. It creates this hype, this buzz, like something big is happening, even if nothing's really changed under the hood. That alone can push demand higher. Now think about Palantir. This is a company that's been growing, dominating headlines, locking in major government contracts, expanding partnerships, and gaining serious traction with institutional money. A stock split in the middle of all that? It could pour gasoline on the fire. Why? Because it invites more eyes. It lowers the price per share, and suddenly more people, especially new investors, can afford to buy full shares. That feels good to them. It boosts confidence. It brings in energy. And once that momentum kicks in, the price can start flying, even if the fundamentals haven't moved an inch. So yeah, according to him, the split itself might not be a big deal from a long-term fundamentals perspective. But let's be real. It's a big deal for sentiment, visibility, and buzz. And that matters. A lot. Because when you mix strong fundamentals with rising retail interest and a potential stock split acting as a spark, that's a formula for a breakout. And we're actually seeing the effects of it right now. Investors are finally locking in on Palantir. It's like all the talk, all the speculation, all the behind-the-scenes movement is finally surfacing. People are waking up to the fact that Palantir isn't just another tech stock. It's a core piece of something much, much bigger. And here's why. Palantir just dropped a bomb in the defense world, teaming up with Blueforge Alliance to create what they're calling warp speed for warships. This new program is all about using AI to supercharge the way the Navy builds and maintains its warships. We're talking about faster production, sharper readiness, and full-on digital transformation. According to the announcement, the goal is to create a digitally connected manufacturing ecosystem. That means shipbuilders, suppliers, logistics, everyone involved is going to be fully synced through Palantir's system. Real-time data, instant insights, smoother collaboration. No more waiting around. No more clunky processes. It's a full-scale upgrade to the Navy's industrial machine. And get this, Blueforge has already been working with Palantir on what they call high-velocity shipbuilding. So this isn't some brand new idea. They're just expanding on something that already works. This new program is backed by serious funding through the Navy's Maritime Industrial Base program, and it's running in parallel with other high-profile efforts like HII teaming up with C3 AI for smarter production scheduling. This is exactly why investors are suddenly circling back. The more the world leans into AI, the more it becomes obvious that Palantir isn't just riding the wave, they're building it. They're providing the infrastructure behind government, defense, logistics, and enterprise AI. It's deep, it's sticky, and it's starting to look unstoppable. When you combine this level of innovation with rising investor interest, ongoing insider accumulation, and even the possibility of a stock split, you get a perfect storm. Right now, Palantir is showing strength on the chart. The market is buzzing with speculation. And behind the scenes, they're securing massive deals that actually matter. The hype is real, but this time, it's backed by something solid. Palantir is no longer just the future of AI. It's becoming the standard. And here's the most exciting part. The UK just made a massive move. Prime Minister Keir Starmer has officially called for war readiness and announced a jaw-dropping $2 billion weapons upgrade. This isn't just about buying more tanks or ammo, this is a full-blown modernization push. And guess what's sitting right in the center of it all? Artificial intelligence, which is Palantir's primary strength. According to reports, the UK plans to pour over $1 billion directly into battlefield AI, tech that can make rapid, real-time decisions when it matters most. And here's where it gets big for Palantir. Palantir has already been deeply embedded with US and NATO allies for years. Their software powers critical systems for defense, logistics, intelligence, and battlefield operations. They've proven time and time again that they can deliver high-stakes results fast. With this new UK initiative, the opportunity for Palantir to expand its footprint on the international stage just got a lot more real. Think about it. The UK is investing billions into AI for defense. Who are they likely to call? Some startup with no proven track record? Or Palantir, the name that already works side by side with the Pentagon, the US Army, and most recently helped revolutionize military supply chains with projects like warp speed for warships. Exactly. This kind of move doesn't just boost Palantir's credibility, it expands their market. And if even a portion of that UK defense AI spending gets routed through Palantir systems, we're talking about new contracts, new headlines, and more importantly, new revenue streams that could send the stock flying. Because investors don't just care about vision, they care about real-world adoption. And this is exactly that. It's proof that governments aren't just interested in Palantir, they need them. So while some are still debating whether a stock split matters, or whether the chart is forming a flag, Palantir is out here locking down billion-dollar defense opportunities on a global scale. And that's the kind of bullish catalyst that doesn't just boost the price temporarily, it can change the valuation forever. Palantir isn't just becoming a national asset, it's turning into a global force. But what is your opinion on this? Comment down below. If you are curious to find more, then make sure to click on one of the videos you see on the screen. And with that, we come to the end of this video. If you enjoyed the video, then turn on the notifications bell on this channel. Missing an important Palantir update might make you lose money, so don't risk it. Also, please share this video with as many people as possible. Let's get this news out there.